Could you help us, for those listeners who weren't the ones who wrote in asking to learn more about impacting investing, could you help define what that means?
Yeah. So impact investing is a type of investing that is defined by its intentionality. So what is it trying to achieve? Whereas most types of investing seek to just generate financial returns for those investors, impact investing has a double target. That second target being positive contribution to societal outcomes, whether that be contributing to fighting climate change or tackling social inequity. Um, the official definition of impact investing has multiple components to it. The first part of it is intention or intentionality, meaning that you as the investor need to actively be seeking that positive outcome for it to be an impact investor. I usually also add to that there should be intentionality by the investee. So by the person or the company that you're investing in to actually also seeking to generate those positive environmental social outcomes. The other part of the equation as well there is when you're looking about intentionality, obviously what gets measured gets managed, right? And so there's a huge component of impact investing, which is also what we call in the industry impact measurement and management, or IMM for short. And so you need to be managing and engaging on these kind of impact metrics to make sure that that positive outcome is actually happening. And so that's one way that you get to demonstrate intentionality of your investment, but also of the investee. Impact investing also still remains, as the name indicates, investing, right? So there's still a objective of financial return. Oftentimes people think that impact investing is concessionary, so you have to compromise on financial returns in order to make impact return. That is not true. There are two, let's say, subsets or two types of conversations in the impact investing world, where we talk about impact first investors on one end, which are investors which are willing to compromise on their targeted financial return in order to generate higher impact. And there's another group of people which are, let's say, thematic impact investors. So people that are still looking for market rate competitive returns and the double bottom line of impact return as well. And to give a little order of grandeur on that one, it's roughly 2/3 of impact investors around the world which are non-concessionary and only 1/3 which are already impact first investors. The last component to impact investing that I usually add, which isn't part of the official definition, is also the point about additionality. And so when you're thinking about the type of impact investing that you're doing, right, if you're investing in something, right, to generate that positive impact, but that impact would have already happened whether or not you were there, right, as an investor, then yes, the impact is still happening. The company or the product that you're investing in is being impactful, but you as an investor, you're not really generating additional impact. And so that's usually a very key and strong concern that impact investors have as they're trying to define and scope out potential investment opportunities.
Thank you for that breakdown. That definitely helps me get much better understanding. And I like that third component, even if it's not part of the official definition, I do see the nuance there. And speaking of nuances, is there a difference then? We're definitely hearing a lot in the media about ESG investing. Is impact investing and ESG investing the same thing?
So it's not the same thing, but the answer to that is yes and no.
Okay.
So you have to think about, let's say, ESG investing as a spectrum, right? Or rather, I rather call it like tiers of a wedding cake. So impact investing is the kind of top tier of that cake. So you can't do impact investing without doing ESG, but you definitely can do ESG investing without going all the way up to impact investing, right? So they are part of what's called in the industry the responsible investing spectrum. So if your listeners quickly Google that, they will see a spectrum that starts from responsible investing that it will roughly end at impact investing. So there are free and even ESG investing, it's a very broad term. It's often actually broken down into its subcomponents and fields. So the first basic level, the bottom tier of that wedding cake, is responsible investing. And that's what most people think about when they think about ESG investing. And there, if I use terminology used by the Impact Management Project, there, what they're trying to do, the mindset there is using ESG factors, so environmental, social, governance factors, as a risk mitigation tool. And that's about it, right? So they're going to look at a company's pollution, supply chain, board independence, all of these elements as a risk mitigation and management tool. Usually also at this stage, you'll often see, let's say, some exclusions also happening, right? So when you just hear about this one is just excluding guns, tobacco, etc., that usually, falls under that bottom tier wedding cake. And so the next step up from that is still what people call ESG investing. It's still in the same bucket, but it's usually what people will call, let's say, sustainable investing, right?
Okay.
So when you're going to sustainable investing, there you're taking ESG factors, the same factors, but instead of just looking at them as a risk mitigation perspective, you're looking at them as a opportunity, right? As a driver for growth, as a driver for success, etc. of those companies. You're investing in top performing ESG firms, thinking that ESG element gives them a competitive advantage and which will generate higher returns for you, right? When you're in sustainable investing, you're going from let's do less harm and you're going into what's now, so you're saying let's do no harm, right? That's the best outcome possible that you're looking for. When you move into impact investing, and this for me is, to that earlier point, yes and no. When I think about responsible versus sustainable investing, it's a constant evolution of that thinking, right? You're using the same factors, you're just processing them in a different way. For me, impact investing still fits under the wider ESG, let's say, bucket, but you are looking at different metrics and it's a very different, let's say, there's a paradigm shift that happens. Whereas in ESG investing, you are looking at ESG factors, look basically at the operations of a company and what's immediately under their control. So for people that are a little bit familiar with greenhouse gas emissions, I'll talk about, let's say, scope 1 and maybe scope 2 impact, let's say, of the company. With impact investing, now you're going all the way to, let's say, that third scope 3 type impact, right? You're looking at what is the positive or negative impacts of the core product or service that is being rendered, right? And so with impact investing, you're going beyond let's do no harm. You're trying to think, okay, let's positively contribute to solutions. Let's actively do good for these investments. And so to give you an example, very few, or rather proportioning to the size of the market, very few investment opportunities can really be considered an impact investment. If you take ESG, some of the top performing ESG companies are companies like a Philip Morris, right? If you think about changing the world, making the world a better place, selling cigarettes to people isn't what's the first thing that comes to mind. But if you look at a firm like that, they score very highly in terms of ESG because they use, sustainable farming methods. They have short supply chains, all of those have really good governance that they've put in place. So you could still be running a really good company, but the core product or service is not actively contributing to positive solutions or actually negatively impacting people and the environment. And so that's where the real distinction, I think, between ESG and impact investing is.
That's fascinating. And I think it explains a lot of those lists we see of most sustainable companies. And sometimes you're surprised by who is at the top because they're not necessarily selling services that you feel like maybe have that positive social or environmental impact. Very interesting. And so we look at that top tier of the wedding cake. I love that analogy. Just love cake. So that works for me. But if you look at that top tier of impact investing, who does that impact investing? For example, is it as basic as that, we're only talking about publicly traded companies and it's individuals investing in portfolios that include those, or what does that even look like from an impact investing standpoint?
So, a lot of the answer to that question I don't need to invent. There is an organization called the Global Impact Investing Network, the GIN for short, which do annual surveys of the impact investing kind of industry. They're actually one of the people that coined the name impact investing in 2008 with the Rockefeller Foundation. And so, looking at their studies, and I would invite readers to look at the most recent study from 2023 on specifically called investor demographics. And so when you look at that study, you'll see that the vast majority of people investing in impact are investment managers, which represent, over 70% of the industry. Next up, you're going to have foundations. And so, or historically, if I think back, 10 plus years ago, foundations were really the pillar from which impact investing started, right? And it went from that to microfinance organizations to then development finance institutions. And now it's really a much larger thing than that.
Hmm.
So foundations and those DFIs, like we call them, used to, like 10 years ago, be the majority of the market. And nowadays, together represent roughly 15% of that market. So there's been a huge shift in who's actually doing impact investing. Outside of that, you're still going to have by much smaller percentages, family offices, endowments, banks, etc. And the last type of investor, unfortunately, is going to be pension funds, right? So globally, pension funds
Really?
are some of the last investors in impact. Quebec and Canada in general are a little bit ahead of the curve globally. So from my prior role working at Fondaction, it's one of the few pension funds around the world actually pushing impact investing quite hard.